Hi traders and welcome to the Technical Analysis Market Watch on Friday the 4th of October. So I've seen some pretty good moves this week on the indices and some of the major currencies, given that it is a major news event being non-farm payroll. So some key levels were hit. Let's jump into the charts and see if we can identify any trades for today or early into next week. All right, we'll start out here with the Aussie USD, and we can see that it continued its sell-off from what has been happening over the last week. You can see we had a lot of resistance here at the 69 sort of, well, it got to 69.40-ish area, and then we saw some really big wick action. This week has continued the selling off, and we've basically got almost to the 20 moving average. In my mind, this level here around 68 is the very key zone. You can see we've got two very important touches of resistance at that point. And this is where I would expect support to be if we're going to get reasonable support. So realistically, probably still a little bit more to fall. The dollar index is looking pretty strong. We'll get to that a little bit later, but it could find support at the 20 moving average. So I'd be mindful of that at around that 68.20, but I'd be looking for maybe a little bit more weakness down to around that sort of 68 zone, and maybe look for a bit of a bounce up from there. If we get around bottom or anything that gives us any signal that it might go longer from there, then we look at moves back up to this zone where obviously the resistance is. But pretty good selling off this week, and look, it gave us some pretty good opportunities even on a 15-minute chart. You can see here all the way down, even though it looks aggressive on the daily, lower high, lower lows all over the place, the things we talk about every week. So really good trading opportunities there on the 15-minute. If you were actually trading it intra-session, or even, it didn't really matter, it was actually very solid. So good trading on the Aussie, but a little bit more room for the support if we're going to get down to that sort of 68-cent mark. All right, move over to the US dollar CAD. Strength to strength is where we can go in here. Obviously, a break of the 20 moving average. You can see that we've got the higher high, higher low sequence. We've got a good bounce off that base, and we've broken the 20 moving average, or about to. We're a little bit earlier than the close, but good chance that it's going to close above the 20 moving average. We obviously had MACD divergence, class A bullish divergence, as you can see. And really, a break of this 20 moving average is very, very significant. The next real zone, very, very heavy support at, or it was support over here. I'll pop that line there. You can see we're heavy resistance, very, very strong support, resistance again, and that would be the next target. So around that 136 level is where we're aiming for with the US dollar CAD. I wouldn't be looking for any shorting opportunities here unless we're closing well below the 20 moving average again, and below that low here at 134.90. If we don't get it closed below there, I wouldn't even be thinking about shorting this one. And yeah, basically just look for long opportunities to join the trend. Again, you can probably go to a 15-minute chart and you'll see opportunities to get in. As you can see, pretty straightforward. And yeah, really just trade it up to the very key resistance at around that 136 would be the ideal trade on the CAD. All right, US dollar yen. This one here is going from strength to strength as well. Obviously similar to the CAD, except just a little bit more extreme because the moves are very, very big here. You can see that we had a bit of a sell-off, early, but it really kicked on now, and it's broken all of the key levels. The daily close has been, basically above the 146, which is a very important zone for it, and now trading really, really strongly up around this area. So this is a very key zone, though. You can see that we've got a lot of support here, and you can go back further than that. You can see quite a bit on the other side as well. But realistically, this is the area where we need to break. It's reached the zone where if it's going to make it, it needs to break through here. We've got an inverse head and shoulders. We've got the head, shoulder, shoulder, as you can see. So realistically, we need to get, if that pattern does fulfill its destiny, it's going to be somewhere around the next very heavy level of support, which is around that 150. You can see here, that's going to be the, see all this support right through there, and that was resistance here and here. That is going to be the target if we get a breakthrough there. So really, there's a solid 300 pips of potential movement if we continue on this trend. So I'd just be looking for series of higher highs and higher lows in the smaller time frame, and you continue on with what the yen has been doing. It's been very strong. Again, not one that I'd be looking for shorting opportunities on. All right, we'll move on now to the dollar index. Again, another really big breakout move. Really, really good to see. This has also got MACD divergence. You can see here the lower, it's class A bullish. It broke through all of the key boundaries that we needed it to get through. It broke through, most importantly, the 101.20, which it did quite significantly at this point here. We talked about that at the Pepperstone webinar during the week. If you, if you're able to get hold of that, you would have been able to get some really good long opportunities in this one. This is another one where, ideally, we're not really looking at shorting opportunities now that this is broken out. If it keels over and starts to trend down on a lower time frame and makes lower highs and lower lows, then maybe look back to a move back down to the 101.20. But aside from that, I'd be looking onwards and upwards from there. And really, the next potential target could be at around that 103.20. So, really good move. That's where there's a lot of support and resistance. So that is the target for it. I'll pop a line there around that 102.80, which is actually the first zone that I'd be looking for. That would be the target that I'd be looking for on the dollar index. A really good trading on it. Of course, the euro is the one that you'd be trading in that instance, and it's been a really, really good sell-off. That's also got divergence. You can see that's got Class B bearish divergence, double top. MACD divergence, pretty strong. Very, very heavy resistance at this point. You can see a lot of selling happened every time it touched it. We had wick action for nearly 7 days straight at around that 111.80 area, but it failed to close above it. And that's always a telltale sign that it is in a little bit of trouble. And then, of course, down it came. Once the dollar index strengthened up, down it came. So, look, realistically, it is at a level of support now, around that sort of 110 mark. But if we get a break below here, I think the opportunities are all the way down to sort of 109.30 area. There's quite a bit of, top action here. You can see a lot of interaction with this price, and that's more than likely to break. So if we get a daily close below the 110, I'd be looking at trades down to the 109.30 in the first instance. But if it does reverse from here from around the 110, I'd be looking for potential little mini scalp longs up until around probably that 111 mark. But difficult trading on the euro because you'd be trading against a pretty strong trend now. So just be mindful of that when you are looking for your trades. And don't forget, it is a non-farm payroll next couple of days, obviously, so just be careful that it's going to be probably pretty flat. The market's already moved a lot for a non-farm payroll week, so just be mindful of that. All right, the S&P 500, look, again, a weakening sort of day. You can see that, it's basically dropped for the most part of the week. Yesterday, it did rebound a little bit. It tried to do a hammer off around that 20 moving average zone. But to me, it's a very key level here at that 56.70. You got these highs here. I think it's still got a little bit more to fall in terms of the 56.50 is actually the level that I'd be really looking for, because this is where the real resistance is. That would be a very, very strong level. So I wouldn't be surprised to see it float and gravitate down to there. The 20 moving average is right there as well, but it's only about 10 or 15 pips above the actual support where we're looking for at this red line. So maybe look for a little bit more weakness into the session. But of course, the non-farm payroll results are going to make the biggest difference. Whatever happens there will dictate what's going on. If we're trading above the 56.50 early next week, non-farm payroll numbers are good, I'd be looking at moves back up to the previous highs around that 57.50. But if we're trading underneath 56.50 after non-farm payrolls, and that's where we were at on Monday, I'd be looking at trades back down to around that 55.50, which is the bottom of this consolidation zone. So that's what makes the most amount of sense for the S&P 500. A lot is going to depend on how the news comes out. So thank you very much for joining us this week. I hope you've been able to take advantage of some of those good opportunities because they were there and our good levels were hit. So hopefully you're able to get some of those. I apologize for my voice. I've got a bit of a cold at the moment, so hopefully this came through loud and clear. Have a fantastic weekend. I look forward to seeing you all next week.